So as a lot of the NFT Twitter influencers continue to be blindly bullish, where is the NFT market really going? Are we seeing any new innovation at the moment? Which are the best projects where you may be able to make a good investment or a good flip? What changes will we see when it comes to NFT collection royalties and the whole entire business model? And how does this relate to current structure of smart contracts? I discuss all of that in this video. So let's begin today with Azuki. Their floor price in particular is holding up quite well at 11.3, and recent news of them launching a physical backed token. Those of you who may not be aware, if you're newer to the NFT space, Azuki were the ones who implemented the ERC721A way back in January 2022. This was essentially a more gas efficient contract option. And you can see in their own post on January the 6th, when minting multiple tokens, the gas cost required is proportional to the quantity of tokens being minted. And there's 3 key optimization points that they went through. So in theory, this physical backed token actually sounds really good. From the Azuki team, they mentioned scanning the chip with your phone allows for the PBT to be minted or digitally transferred to the owner's wallet. This allows the current owner of a physical item to also own the PBT, which verifiably authenticates the item and ties the item to a digital token in the wallet of their choosing. Now, we can think of many ways in which this would be useful innovation going forward, especially in the market, the physical arts market, or any physical collectibles. Since the announcement, we saw a very slight pump in the price and the volume in Azuki, but nothing major. However, still doing well off its lows way back towards the end of August, which was just under 6 ETH. What does this mean for Azuki going forward in particular? Well, in my opinion, because market volume is down so much and there's a lack of interest in NFTs at the moment, compared to say 6 months ago, I don't think it's going to make that much of a difference, unfortunately. I don't think the innovation is anything groundbreaking, in my personal opinion. However, potentially you could argue it opens up the use case for NFTs, which is what the NFT market really needs at the moment. Now, in terms of price, we actually hit in the resistance between 11 and 12 ETH, which would be a difficult barrier to break. Remember, this is all priced in ETH though, and you have to really convert to dollar value to get a better idea of where Azuki's floor price is at the moment. The other big talking point is the switch to optional royalties, and Magic Eden has led the way. And basically, under the optional royalties model, the buyers are given the power to set the royalties they want to contribute to an NFT project, meaning there is a chance that some creators may not receive royalties when their artwork is sold. Now, in my opinion, I'll take it a step further and say, look, nobody wants to pay extra commissions. If you were going somewhere, for example, you were going to the petrol station to fill up on gas, and you've got an option there in terms of whether to pay the duty to the government, you're not going to do it, are you? You're not going to pay the extra $10 or $20. So I don't really think that solves the issue. But the problem there is at the bottom here. The NFT marketplace shared a graph showing that the number of cumulative wallets using optional royalty marketplaces to buy and sell NFTs has skyrocketed, and obviously it will, because it's cheaper then to buy and sell NFTs. And when you're selling the NFT, it cuts in to your profit less, especially for those people who are flipping NFTs, which now seems to be the majority of people trading NFTs. And just to be clear on exactly how that works, for example, if you owned an Azuki, you can see here the creator fee is 5%. So when you come to actually sell an Azuki, you'll be paying a fee to the marketplace and also paying a fee to the creator, which is Azuki. And people would argue in terms of revenue and a business model, it's the royalties that can help sustain a project longer term. However, obviously with no royalties, that's going to be very difficult. Other people are arguing that the reason the marketplaces are doing this is because volume is down so much that marketplaces need to make back some of their own revenue. So an easier way for them to increase their fees perhaps is by reducing the royalty, or even keep their fees the same, but encourage trading by reducing royalties. So they might want to keep their fees at 2 to 5% or whatever it is, and royalty fees be 0 or optional. But the problem is the marketplaces are not understanding that the reason their own commissions are down so much is literally because of the environment right now. There is a lot less volume in the NFT market, and there's nothing that's going to change drastically that will improve their margins. What's even worse is because there's so many marketplaces now compared to say 12 months ago, that all of them are taking a share of the pie. And the problem with that is, again, they're going to have less commission, less trading volume overall, each particular marketplace, because they're having to share with everybody else. Again, this was not the case 12 months ago. And it's funny to me that OpenSea, for example, at the moment, if you look through their recent tweets, it's amazing. They're doing massive innovation at the moment. They're adding all sorts of analytics to the platform. Mention here that the actual platform's available in several different languages now. They're pushing the engagement farming now on Twitter with good morning, good nights. But my issue with this is, where was this all 6 to 12 months ago when the volume was really good? That's when they should have been innovating and adding all of this cool stuff to their platform. Not now, when they themselves are struggling for revenue and their own commissions revenue is down probably anywhere between 90 and 95%, maybe more. So as a trader and investor then right now, because the volume's low, where can you invest when it comes to NFTs? Or where potentially could you make a good return, even on, let's say, a short-term flip? What are the options for you? Just before I show you a really good example of that, if you're new to the channel, please hit the subscribe button and turn on the bell icon. I'll be sharing my opinions about the NFT and crypto markets regularly here on YouTube, and please consider sharing the video. There are so many people still clueless about NFTs and how they work, and these types of videos will help. So Anthony Hopkins released a collection which sold out very quickly in a few minutes. So let's talk about that. The price to mint this particular collection was 0.25 ETH. Now ETH hasn't really fluctuated that much over a few days. It's been kind of sideways. And the current floor price is 0.69 ETH. And apart from personalized NFTs, you get the option of potentially winning an autographed art book and a Zoom call directly with him. This particular article, you can see again the problem with trading volume, which was at the beginning of the year 17 billion US dollars, and in September just 466. So that was a drop of 97%. When you review the collection on OpenSea, you can see the floor price actually much higher now. It's 0.89 with a strong best offer. And remember, the mint was only 0.25. There were 1,000 items minted, so not a crazy amount of actual supply. The creator fee was maximum, which is 10%. So what is my point with this particular collection? The point is, this is a person, and obviously a famous actor and director, but this could be anybody who has an audience, who has a following. If they have their own following and their own audience, it kind of doesn't really matter what's going on in the outside world. You have enough people there who buy and sell to each other. Meme Land is a really good example of that. When you've got 100 or 200 million followers on various social media accounts worldwide, you're not going to struggle to sell out of any NFT, and you're not going to struggle to hold floor price. It doesn't matter what the utility is. So just be very clear on that. But if there's a brand new NFT project, a brand new one, and let's say they're making a new project with some incredible utility, it sounds like there's some real innovation going on here and they're working really hard on their project. There's the problem. They're going to go to Twitter, maybe YouTube, maybe Instagram, little else to kind of share information about the project. It tends to be Twitter first and foremost. So they're going to try and share on social media. And here they're going to try and build a following organically, which is very, very difficult anyway, but even more difficult given the market has contracted 95%. And when they develop that particular audience, the problem they're going to have, especially on Twitter, is it's going to be an audience maybe of people who are trying to flip NFTs. So the only reason people want to mint is to try and make some profit, because that's the state of the world right now, and that's understandable. So they're going to have a lot of these people in that pie of, so, you know, like maybe 70% of people will be just looking for a quick flip. And then 30% will be genuinely interested in the project. But again, a lot of people won't have the money to for a high paid mint right now. And that's not what the market's like right now. So a lot of people are doing obviously free. There was a free mint meta, and then people are doing very, very low paid mints. But the chance of this NFT succeeding without a following is very, very low. The chance of somebody doing no utility and no innovation at all, but having a massive following, any kind of reasonable following, the chance of them succeeding is very, very high, because it has the audience, it has the brand, it has those people who believe in that particular, let's say, influencer, business, whatever you want to call it. So they will just invest based on that alone and that trust alone. And this NFT, who nobody's ever heard of before, is really going to struggle. So if in the coming weeks and months, you see well-known influencers, brands, anybody with some sort of following, it's much more likely that a particular project will do well. It of course depends on the mint price and other factors and the general market environment, but not as much as you think. So you can actually look back at the last kind of few weeks of projects, any of them that have actually done well, this tends to be the story. So here's what I think will happen with the royalties and the different marketplaces. This is what I think we'll see in the next kind of 6 to 12 months. And please let me know as well in the comment section below what you think will happen with this and with the general state of the NFT market. Do you think we will later this year get some sort of expansion, or where do you think we'll go? I have another video that I'm going to be releasing very shortly where I deep dive into the analytics, but I'll leave that for our next video because it'll be a little bit longer. But basically with this one, look, it's very simple. If you go back to kind of first principles here and stuff like that, and just think about an NFT on a particular marketplace. So let's say you were releasing an NFT collection and it was a free mint. The only way for a free mint, obviously, to make money is with royalties. So that would be a completely dead project straight off the bat. It wouldn't work. So how are they going to control it? This is the only way I can think of. The only way this potentially could work is if the NFT actually has something in the contract where it basically stops people trading on particular marketplaces, if that's even possible. Now, I'm not a developer, but I know that there's been so much innovation when it comes to smart contract that potentially we may see some changes in the near future. So is there some way they can actually block this? Now, this kind of goes against Web3 in terms of ethics, but anyway, let's say that was an option. Or another option is a new marketplace. Out of all the marketplaces that are there at the moment, a new one that actually gives creators and the NFT more control. So they're more likely to deploy on that particular marketplace so they can control royalties. But maybe the way they control royalties is it has to be a set number. It's not something that could be amended or changed. So it's actually set at the contract level, let's say to 5%, and that can never be changed. That is an option there. Now, obviously, depending on the market and ETH fluctuations, you'll get changes in terms of how well that particular project is doing from royalties. However, that is an option there. But the only issue with all of this is for a new smart contract and a new NFT. What do you do with the existing NFTs, the existing pieces of artwork, the PFPs, the utility NFTs, music NFTs, etc.? What do you do with those in the current marketplaces? It's really difficult because a lot of these contracts are now immutable. You can't really change anything unless each creator makes a new contract and asks all the existing users maybe perhaps to migrate over, which again is a lot of complexity, a lot of costs involved, not least the gas costs, for example. So this is a problem, but I believe this is actually a major problem that needs to be solved. Otherwise, it's going to put people off creating collections or moving businesses into the NFT world where they can actually utilize NFT strategies and utility and implement them within their business model. So that's it for this one. Thanks very much for listening.